Hopping into our first chart here, Helene, we always like to, just kind of do a sector overview or market overview, kind of, talk about what's going on broadly across the markets. Obviously, another tough day of selling. Certainly, but nowhere near the lows that we experienced on Tuesday. Obviously, the last time we were together, we were, breaking down further from here, but, still seeing some selling pressure in the market, certainly. We've dropped back down now below 6,800 on the S&P. We are below the level we closed at on Tuesday, so I think that's notable. Obviously, intraday Tuesday, we dipped, much more substantially, but still really struggling with trying to recapture that 50-day moving average, trade back up above that 6,900 level on the S&P, Helene. And again, while we are still obviously trading above our 200-day moving average here, the long-term uptrend is still intact. There's starting to be some questions around it, certainly, because, for about 3 weeks now, we've been remaining below this 50-day moving average. We have not, been able to, really gain any type of momentum above it. And now we keep testing this level, pretty high frequency now, around 6,800. So that was our floor of support below this market at the S&P 500 index level, of course. So you can see now, in the past 4 trading days, we've gone down and tested that level on 3 of them, and we've broken through of it. We've broken below that level on 2 of those occasions now, trading below it now. So, if we were to close at this level, that would certainly be significant, because it'd be the first time we closed below it, dating all the way back to this date right here, looking back to mid-January. So, it definitely looks like we're starting to see some further trend degradation here, at least in the short term. If you just look at our middle counter channel here, that obviously, it's just the 20-day exponential moving average. That's all the middle channel is there. You're starting to clearly see that take, a move lower. I mean, if you just kind of, just drew the line right through the middle of all the price action here, really dating back to mid-January through the present, you mean that, there would be a slightly downward slope here. So, anything else that you're seeing here, just, that you want to really point out here, at the index level?
Yeah, looking at the index, I was not thrilled to see today's movement because yesterday, we saw a bounce off of those lows from earlier in the week, and that was, a positive sign. But what I'm seeing really specifically today is that it's trading lower off of the middle Keltner channel. And this is something that we touch on pretty frequently when a stock, ETF index, when it's in a bearish trend and a strong bearish trend, it goes and starts trading down below that middle Keltner channels. And often what we see is that it tries to trade up to the middle channel. It hits its head on the middle channel and then trades back down. And that's what we're seeing here today. So did not love seeing that on the index level today.
Yeah, that's a really great point, Helene. I'm glad you brought that up. Yeah, because I mean, clearly it's just, right in line kind of with what I was saying, but it's just another clear sign, that we, really struggling to gain any traction moving to the upside, to really attract further buyers to the market, to power, the index, past that level. It's definitely, that is a clear another level of resistance above the market right now. And so, obviously, you see the rate at which the 200-day moving average is sloping up. We're starting to have the index drift lower, even though it's not a, really sharp, severe sell-off. We're still only several percentage points from the all-time highs. Still, to keep things in context here, obviously, but, we are starting to, drift lower. That 200-day moving average is, very clearly inflecting higher. I think, Helene, that's really just setting up, for a definitive test. Yeah, I think there's almost no way we're likely going to avoid a test of that 200-day moving average here, in the weeks and probably month ahead. So, certainly something we're going to be watching for, really want to see this index hold up above the 200-day moving average. Again, it's been a long time since we've even been kind of in the same zip code of the 200-day moving average. So something definitely notable there. But, Helene, just moving on here, it is, just another day in the markets where it's, almost kind of a no place to hide. It's not so much so as Tuesday, obviously, really all the sectors almost broadly across, I think it was all 11 of the S&P sectors. We're actually down on Tuesday, but you can see today, there are a couple places that are actually up. You can see that energy obviously is outperforming. There's, certainly, not to state the obvious, but there's some obvious reasons for why energy is outperforming. Interestingly enough, Elaine, you can see, I know the XLK Tech sector ETF is actually about flat to moderately down.
Mhm.
But you see the sector broadly here, the infotech sector is actually in the green today. I found
Yeah,
that to be pretty interesting.
I
You know that.
be interesting too. And I know it's coming off of what that the earnings report yesterday, right?
Well, I think that's a big catalyst. So I didn't want to mention that, but yeah, I just I think with kind of how investors are reacting to the current events that are really kind of driving the bus for the markets. The typical safety trades that you would expect to rally. When you see a big geopolitical shock like this, you would think okay, gold, precious metals are going to do really well. You're going to see a flight to safety into treasury yields. You're going to see a flight to safety into defensive stocks. Sorry, not treasury yields, but just buying bonds. You're going to see yields fall because people are buying them. So sorry, I just want to correct that. But the typical safe haven trades, we really haven't seen that play out this time. And the large reason for that is because of what is happening in the energy markets. Obviously, that kind of disrupts that whole narrative. So you're having energy prices spike. Obviously, that's leading to what could possibly happen down the pike coming with inflation. And so, there's some flock to the energy stocks, which were already one of the stronger performers on the year, Helene. But interestingly enough, one of the other places that traders have identified as a pocket of, kind of a defensive play were all the information tech stocks. You've seen software bounce back in recent days, obviously off of way oversold levels, but also the Mag 7 stocks. You're seeing some of those actually up and up, decently in the green today on a pretty negative tape. So just you thought that was pretty interesting to see that, obviously energy, it's understandable why that's up, but I thought it was notable to see that tech was actually up too.
Yeah, I think it's really interesting, especially information technology, as you had said. And we can jump into this chart later, but I think it's worth looking at the sector IGV and seeing what's going on there. So maybe later
For
on
sure.
we can look at that because I saw that yesterday and I was actually shocked. I actually was shocked seeing it. So
Yeah, exactly. But I mean, just to also speak to the other point, I mean, take a look at the worst sectors on the day. Like I was saying, typically you would, think to see, investors flocking to the defensive trade lane. I mean, take a
yeah,
look at the worst sectors of the day. You see healthcare down there on the very bottom, almost down
yeah.
more than 2.5%. Staples are down more than 2%. Utes, the utilities, they're down almost 1.5% today. So, obviously, they're not really catching a bid, from a defensive play.
Mhm.
So, from equity side, definitely far and few between, the places to hide out, a tape like today. But again, that's all because of what's coming up in the next chart here. So, given the potential for an energy shock, the obviously rising price of oil, we've seen oil up, obviously Brent crude's up, WTI crude's up, VIX is up substantially, and Treasury yields are up, all because of this. So, as we mentioned, investors are clearly not quite flocking to Treasury bonds, and so much so that it's actually going to, cause the yields to fall. You're still, seeing those, prices of bonds come down because clearly the yields are rising here. This is a chart of the 10-year U.S. Treasury yield, Helene, and just think about it. Here we are sitting on Thursday. Last Friday we closed near the session lows, and it was actually had just dropped below 4% on the 10-year U.S. Treasury. See, it actually closed just a touch above 3.95. So that's where we were just this past Friday before the events of the weekend. Look at the move it's had in just 4 days. I mean, this is just a crazy, like meme stock level move for for a treasury yield. I mean, it went from 3.95 basically almost all the way up to 4.15 now. I mean, that is just a crazy, crazy move.
Yeah, no, that is insane, Blaine.
Yeah, exactly. So I mean, you just think about like the last time, we traded down to the 3.95 level in October of last year. And, it took us, a while to get back up to the level we are now. It was like several weeks to a month to get to that level. That
Mhm.
move has happened in 4 days. So obviously that's a huge spike in treasury yields.
Absolutely.
That's certainly what's, put some of the more defensive sectors on the retreat because obviously those higher treasury yields are starting to look more attractive, competition for investing dollars, things like that. So, that just leads me into my next chart here too, Helene, before we get into our trade ideas for today. But it's the just looking at the chart of the RSP right here. This is, of course, the equally weighted S&P 500 ETF, and so obviously this had been the trade year to date. It was the equal weighted trade. The equal weighted S&P was clearly outperforming the broader markets. Not that the headline index is really doing great today either, but you can see that this is down, about 1.5% on the day just today. And clearly looks like that uptrend is starting to at least take a breather here. As so many of the other sectors that had really been driving that strong performance lane are starting to really pull back and kind of just pump the brakes a little bit here today.
Yeah, no, that's a good chart to show, and it's just been interesting to see today's action, as you had said, where those top performing sectors have just really been hit hard. But also, it's clear to me that we're seeing some signs of rotation, right? Like the money's not just going away; it's going to different places. And after I saw the chart of IGV, I have to say, I'm like, oh, I should be trading IGV right now.
Yeah, yeah, for sure. It's definitely an interesting chart because certainly experienced a big jump back in recent days, and even some of the crypto stocks too. So we can kind of cover all that here in a bit. But yeah, I just wanted to just highlight this because, as you said, there is some rotation obviously still going on in the markets,
Mhm.
rotating to less places than where it was before. It's obviously fleeing to some of the places we mentioned earlier. But yeah, I just thought that this was notable. Seeing RSP trading back down to about what's close to about a month low. The lowest level it's been in about a month. So certainly something to watch there to see if the equal weight trade can regain some steam, or if this is a little bit of a pullback still here in the making. So